Good people, how are you? It's Crypto Sniper. Yep, we're talking cryptos, and I've started off with BTC. So one of the key elements about how we've been calling the Bitcoin market, the short there, the cover there, and then the accumulate period, largely that we're emphasizing here. The key part was to be early. That was your break. We've covered this on a number of videos. So this is about Solana. This is the key value of select alts overperforming while Bitcoin is actually not really going up so fast, going largely sideways, setting up and dealing with a key level of significance. So this is how you maximize in this game. You be in the tokens that are strongest at the time that Bitcoin is permissioning continued bull market nature, but at the same time is maybe not ripping in terms of its performance itself. Now you may know that we were accumulating, we treated every dip below the 30k, we said stay with it, this is accumulation period. You can see how the best part of the move for Bitcoin is essentially there. Note when you got to the top of the megaphone here, you had a moderate to meaningful pullback of some size, but not as large as most would hope. Why? Because everybody is still in bear mode. And then you've had the next strong move. We broke the megaphone, we came back and we revisited it. You can see actually 2 wicks there. And then we've been slightly slower moving. And that is a somewhat of a broadening structure on a bull pole over there. That's what's been going on. But the main reason behind that is there's a key level of significance, and that is the neckline of that same very head and shoulder. And inside what actually is a slowing of momentum, marginally higher highs going across the top there, there is also a separate, which is slightly conflicting potential setup, which could materialize, and that's what we typically refer to as a squaring up, that I'm drawing in the blue color. That is a winding up to deal with that same very key level of significance, which is 47.5. These are ideal, fairly benign circumstances where Bitcoin has been bullish. It's in a snapback rally. There's a lot of money still on the sidelines and in denial, etc. And as a result, it's bleeding up at the moment in this broadening structure, but now it might be squaring up to take out the key level of significance, that being the 47. Note how you just run it and you pull back, and a second test you just run it. The good thing about this is you didn't make a new high, so there is compression here. So we may well get slightly imperfect that you made a marginally lower low there. It could be a bit spiky, but as I wick trim, you could get upside continuation to leave the 47.5. So it's been serving as resistance. Remember, the key level of significance, always just run. So this has been the setup of this possible structure. I'm suggesting that you may well go up, but we could be wrong. You could go into a longer period gestation and have, let's just wipe that setup. That's probably my primary setup, the one I had on that I've just cleared, but you know, you could do that and have a little bit of respite. You kind of had a small amount of falling wedge structure in here when you took some respite, and you may get the same, but I have a feeling that the pullbacks will be smaller for now, and that it's all about dealing with this level. You could have also got a rising wedge, but that didn't happen following the failure of that to make a new high. So if you're making marginally higher highs, you could have got a rising wedge. Some people will point to a bigger structure on a bigger time frame. Let's take another color altogether and say, well, have you not already broken out of a rising wedge in that sense, and you are already in a pullback? Well, typically once you got out through this 40k, another key level of significance that we drew, because that was your stall box for this whole accumulation period, when everyone hated us and the market wasn't moving and we were saying, no, you want to buy us bull, and nothing happened, and you kept getting tests of the 30k and then some rallies and then squeezing lower, and it looked like, oh, you're going to be wrong. We're going to 20, we're going to 10, we're going to 8. We had a lot of that, and in essence you have essentially, but it's not a violent break. This is actually fractalizing into a potential squaring up structure that will probably deal with that. you get two kinds. This is not high momentum, high volatility break. You made a marginally lower low, as I've highlighted, but barely. This is not the kind of falling wedge collapse that would see you running the 40k before you get some sort of a rally that would make that wedge more relevant. Could it come? Yes, somebody could say something, or other matters could concern. But basically, that's where we are on Bitcoin. But it's not Bitcoin I really want to talk about. So here's the difference about folks in premium versus folks in Freeview. We actually gave on Freeview Solana to everybody as a relative overperforming potential token. And we said it has shown its strength. And we even made the point of others were in, we defined the half-time of crypto when we had this 2-3 months, the summer doldrums that we were referring to as orange wedges, falling wedges during the half-time, drawing on the parallel of typically our kids are given when they're playing soccer, something to munch that's refreshing and a bit of glucose. And this is what you got out of Solana. And one of the key reasons why we said you want to look at this particular token is it didn't form a wedge. It actually formed an HVF. In other words, after its first and primary sell-off, which was the Bitcoin all-time high smashed down to the neckline, not yet the shoulder, reflation for the shoulder, and then second fall off, Bitcoin was making new lows here on that down leg. That was the run then to the 30k, and then the final rollover and capitulation just before the wedge break on Bitcoin. You again failed to make a lower low than the previous low. So what this showed was there was a real block of accumulation of Solana. There is not the same degree of panicked investors or traders that were all running out. While Bitcoin made a newer low at this point and pushed lower the second time, and also even think Ethereum, which I think a great deal of and will do really well, Ethereum was a falling wedge. There, this low went lower before Ethereum broke. Maybe I'll just flash the chart of Ethereum for you so that you can see it and remind your brain. I have visual memory of charts because I look at them a lot and I have that kind of memory. If I just wipe the face there's your Ethereum chart. Flatter. Actually, I'm not entirely accurate that Ethereum, the biggest low was the first strike on Ethereum, but it was super heavy. So it's a falling wedge, but not as bad as I thought. Let's just get you a different example. Where was one that was XRP? Let's take. There you go. Low, the second low even lower. So the first strike was just the first strike. Then you traded lower on the second strike, as did Bitcoin, and in Ripple's case, almost the third time, almost as low again. It has since recovered rather nicely and is in the green zone and has climbed out of the basement, the blood basement. But you can see what we were referring to. The value of Solana was that it showed relative strength in a difficult period. It's what they do when the heat's on. It's kind of like pressure football, pressure rugby. Everyone's a star. Everyone's a flat track bully in a bull market. Everybody's a hero and winning their fights, making their hits. What happens when you're up against the world champions and you're 10 points behind? Who stands up and holds his corner, his side, and is still making his hits? And in this instance, relative strength was shown by Solana. And we also showed this setup on Bitcoin, which, by the way, is still not complete. You've just made your second interim. So there is actually a bit more for it to come against Bitcoin. And we gave you this. Now, the difference is in our community, a high percentage compared to Freeview, the number of people who watch our videos, thousands, not because we're especially big, but there are thousands of people who watch. Other channels have tens and hundreds of thousands of subscribers and viewers. But it would be thousands. It goes on Odyssey again. It'll be watched there. Don't forget to subscribe to Odyssey. You'll get the Reset Sniper as well, by the way, in our primary channel. Go to that Market Sniper Odyssey. Okay, and only the Reset Sniper requires library tokens. Everything else is free. So you've got a bit more squeaking up to come out of Bitcoin, and we highlighted its relative strength even against Ethereum, which was also a structure. And for us, you've not yet quite made your target against Ethereum, so it's going to squeeze a tiny bit higher, but the bulk of this impulsive move may well be done. But we expect also overperformance, and we'll be getting in again. This has yielded deep in the 6-digit sums for me personally on this single leverage trade alone, and required patience. You know, our video on Solana was done. I'll have to get it up and check. Normally people would have that up already, but you can go look for the Sol beer, the thumbnail that has the Sol beer when we were doing some time ago. And this was roughly when Bitcoin was breaking out on the wedge. And you would have had to sit patiently, but you were grinding higher the whole way. You got a good impulsive move, then you grinded higher. You had to sit with the trade. You walked out through our just-in-time entry, and then you smashed it, and now you're through target, and you will have an effective overperformance, because I expect it to make the Sol BTC target as well. So it gave you triangulation. In other words, cross-referencing structure that was in existence against both Bitcoin and Ethereum. This is the value of 360-degree analysis. You're learning here. You're learning how you can be a better trader, but it's much harder to remember to do it all the time. If you're in a community of the willing where everyone is doing this in favor for you, then you are getting exactly what you need, and you're being reminded of all the core elements. So with that said, I want to highlight so from the Bitcoin Solana chart, you can see that we still have an anticipation for a little bit more from Solana. However, remember one thing, that's against Bitcoin. Were Bitcoin to have a slight pullback against the dollar, Solana could actually make the Solana Bitcoin target as well, but not necessarily advance much further in dollar terms. Generally, I don't think that's going to be the case, but there's still an assumption here when you're triangulating. So Bitcoin dollar comes off, Solana holds its price a little better, it gains and finishes through the 17.5. And this is the value of doing 360-degree analysis, having real confidence in a system that you see generally is a great probability-based method with respect to everything else that generates stops, targets, and limit order entries or stop order entries in a bull market. If you do this and you maximize during this period, guys, you will be doing great. My community and I will be focusing on the next token we expect to have that will give this degree of outperformance, and we will be getting back into Solana, but it may have slight pause after all targets are done against Bitcoin and Ethereum, as well as a little bit of an overrun on the USDT, and then you might want to accumulate it again as a long-term hold for your blue pot. But we trade structure when we're trading with leverage. So you have your blue pot, your orange pot, and your super hot pot. And those must always be based on structure. And it also involved the key assessment of relative strength in tough periods. If you get an HVF setup during halftime oranges and pullbacks when Bitcoin has sold off 55%, that is the token you want to trade. And that was given to you for free. And if we look at the percentage of my community that took it and how committed they were in terms of funds that they put towards it, towards you watching it on Freeview, many guys will have watched that and said, that's interesting, and done nothing. The number of people who would have done something and the degree that they would have committed to the trade is significantly less. That's the process of developing confidence, committing to an approach, and going for it and saying, we're maxing out during this process. Okay, so nice to check in with you. Grab the mini series if you have no funds. Book a call on the link below, and you can have a chat to someone just like you who is contemplating, is there value? Will I build more wealth as a result? Will I get a return on my investment that will exceed that which I've expended and exploit this alt run period and this bull market period better than others? Most people were too bearish and are too late and are turning back into the market too soon. Just by being earlier you should already have made back whatever proceeds you expended to come and join us. Okay, thanks for watching, and likes and shares are greatly appreciated, and we'll catch you on the other side of that. That was a quick update on Bitcoin and Solana, and we are sharpening our knives for the next one. Bye for now. A final addendum that I didn't really properly suitably handle, that I wanted to leave in as a gift for your learning in terms of this whole structure, was how, as I say on my reset sniper, the biggest mistake people make in terms of technical analysis is that they're focused on indicators, moving averages, and not understanding volatility. It's like being a sailor on the high seas, the oceans of the world, and not understanding tide. Volatility dissipates, gets super low, and then suddenly comes back with a bang. No sailor would go sailing without knowing high tide, low tide, and currents. And volatility is even more different. Instead of slowly dissipating and then slowly coming back in, it slowly dissipates and explodes back in. Imagine the sea went out super quietly, and then every time it returned, it was a tsunami, a massive break. How much more focused would naval people be on already high priority item? Yet, no matter what I say and do, I am the volatility technical, macro technical trader, and so few people seem to learn that this is the biggest gift that just keeps on giving. In this chart on Solana, let me just illustrate the element of volatility. It was the ugliest, most beautiful HVF we had, because it occurred in a very negative market, and in spite of that very negative market, it still created an HVF. It was convex. That means it had rounded tops. I'll choose a color and just demonstrate that. It had pretty rounded tops. We like something more concave. You see that? But in spite of that, the context of which everything else was falling apart, that it did that, gave us bull bias. In HVF we trust, and the nature and structure of it becomes less important if in the macro 360-degree analysis, that's the other key element that we do in all our analysis, is this was a correcting market. And Bitcoin was an accumulate, but in a very difficult circumstances of pulling back and volatility ironing out, that eventually saw it reassert. And as I've already showed, that reassertion occurred there. But if I just remove that, that held HVF structure, and this was also being squeezed back down into lower volatility across the highs, and a little bit, but not as much, across the lows. Why? Because we were leaning on the floor hard, because that correction was truly violent, and it took a lot of pressure on the floor. We lent on the floor really, really hard. And the compression was allowed to play out across the top. The panic money kept getting out sooner and sooner and sooner, until all the panic money had run, leaving a lot of money on the sidelines and clear value buyers that were accumulating along the low that probably maybe had better information, smarter minds, etc., that were stocking up against that scared money along those lows. Volatility is the indicator you should have. There's a historical volatility, and you can put it on your charts there, HV. And what you can see is the huge increase in the volatility with the collapse of Bitcoin, which had the associated collapse also in Solana, which took it from around $58 right the way back down to a lowly 19. Big sell-off, you might say. Yeah, it's almost 60 to 20. It's about 2/3. Actually, that's pretty good, because Bitcoin was 55, and it's the big boss and the lowest beta. Others are 70% and more for its half-time pullback. And remember, why do we get pullback so big? In the equity markets, 20% down is a bear market, because of the volatility in the underlying market. It is a hyper volatile, highly expansive market. It does 25% in a day. Big crypto tokens can do 25% in a day and follow that up with another 10, 15, and can be up 100% in a week. That will be the big market cap tokens, not shitcoin XYZ that can do 10x in a day. So the key element is what goes up so fast can also come down a lot faster. Hence why the 20% bear market qualifications do not count. We never entered a bear market. We had a corrective market despite certain macro alts losing 70%. You might say, okay, it's a small time frame bear market. It was a correction in the macro bull. So, okay, the correction is a mini bear market, fine. But you should still have the macro bias despite losing 70%. And no other market conditions can say that. So we are far higher beta. And as you can see in the historical volatility, I've done a similar draw of structure showing the compression. The second stage sell-off in Bitcoin. This was the Bitcoin from the high to the neckline. Then its right shoulder occurred for Bitcoin. Remember, Bitcoin did this rising wedge, marginally higher highs into its final high, and then sold off hard, and then did a right shoulder like that. And you had a rising wedge in both there and your right shoulder. So this sell-off correlates to that event, and then the break of the right shoulder that then took you to the 30k, sub 30k target. This was your secondary, and it was a far larger sell-off, but on Solana it held it. So Solana was already showing a reduction in the volatility and squeezing, in spite of it setting a rather convex rounded top, a little bit of man peas off the roof for a while there into a final low. The fact that it held long run in the difficult circumstances was inherently bullish, and the Bitcoin, the Solana HVF became good. But we didn't wait for the traditional entry. We took the Bitcoin entry, which was the break of the falling wedge. I've even turned what is an HVF into a mock falling wedge. Please note, this is an HVF. The lows are higher, so there's proper compression, but I've drawn it because of the amount of compression that took place across the top, with people getting out ever sooner and saying it's a bear market, gotta leave, spill, panic out. The weak hands, they then eventually were out. Now all that money needs to get back in. When do you get funneling? Usually inside our funnel, where you get low volatility events. What you got was your funneling price behavior was this period here that I've highlighted into a rising wedge in these three pink lines with its splitter. That was your funneling. Note, from that event, it started from that low down there. You were squeezing ever lower in volatility, and then you went into a point of hyper compression in your volatility. That is a super low tide. What do? You're sitting in Malaysia. You heard there was an earthquake, and now you got a super low tide, and you can run out on the beach 150 meters, and the water keeps pulling back, and you're seeing rocks and shellfish you've never seen before, and you're having to go so much further out with your surfboard to surf. No, here's a tsunami coming, my friend, and the tsunami of volatility did come, and as a wall of water, it pumped, and shorts got murdered. Shorts were the guys with the surfboard running out further and further into the ocean to go surf on the day the tsunami was coming. You get hyper compression in here in a rising wedge. But rising wedges are bearish. No, sir, they are not. Not under the circumstances of HVFs, not under the circumstances of appearing in a funnel, not under the circumstances of a macro grand crypto bull market reasserting, with Bitcoin, the God market, reasserting on a breakout of a falling wedge after halftime first oranges. Type 3 wedges can be more regularly assumed. In other words, pop out the tops. Why? This was all funneling out to get going, and then you get your melt up through to the target. This was a volatility based analysis that was making it patently clear you were getting hyper compression. If you were watching this very, very small squiggly line getting ever so minute in its movement, you are watching an event about to happen. You are watching the Christmas tsunami with the water draining away from the beaches. You should head for the hills. You should be in your car and heading for the highlands. You will be the survivor and the thriver because you understand the tide, the true tide of trading markets. Volatility. not moving averages, lagging mathematics applied to old price data. That is the brick on a goddamn bungee cord that you've tied to yourself and follows you wherever you go, and every now and then kicks your backside. I can tell you, my shadow has never kicked my ass into my house. Never before, and it never will. I drive the market of where I'm going. My shadow does not. Moving averages do not drive price. They are a function of price. Okay, my usual rant, but understand the biggest gift is volatility, compression, and trading the sudden expansion. You could have got late with stops under there in that trade. If you knew HVF method, you would be getting out up top there. You would have a high reward, even if you hadn't got in with us early on the Bitcoin break. Okay, that's a little bit of additional, hopefully value add that will reframe how you look at markets. And there's so much more to learn practically of this nature. You have to be continually reminded of it. And the best way to do it is through community-based. But you'll do what you do. You'll apply what you apply. And good luck to you, whatever you decide. All the best for now.